All right, guten Morgen. It is Monday, just slightly after 6:30 in the morning. Welcome to QuantBox Live, where we get our global macro on and uncover the best fundamental opportunities. We look at everything: yields, energy, metals, stocks, currencies, cryptos. Yeah. And then we look at the flow of capital as well as the stock of capital. We look at interest rate projections from all the central banks, and we can break things down into tradable baskets, risk on or risk off. Yeah, how interesting. Now, why would we care about all these pretty colors? Well, we're trying to discern the underlying trend. And if there isn't one, then we're trying to find the appropriate cross pairs. Ultimately, we're trying to make informed investing and trading decisions, both with short-term information like market sentiment for the now, or long-term information like where the Central Bank of New Zealand expects their interest rates to be 18 months from now. We look at both. Nice. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. I had a question over the weekend. Where do you sign up for the AI alert service, which is about to go officially live? It's unofficially live right now. But it's right here on the dashboard. You can upgrade your account. It's $199 a year. Somebody said that was, I also got an email. They're like, that's too expensive, $199 a year. So I said, well, don't sign up. And so we solved that. I'm like, really? $200 a year is too much? Like, okay, I understand. Great. I try to make it affordable. This will become $365 a year. Of course, I had to pay money up front to even develop the technology, which is very, 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 very close to being done. And I priced it at a whopping, I said to myself, how about $1 a day? So anyways, I tried not to make it expensive. So anyways, if you want to sign up, there's still a way for you to contribute, kind of like a founding member of the service. Cool. So that's that. That's where you do it. That's where you get her done. And so I got another email over the weekend, and someone's like, I got the AI alert on Saturday, and it was blank. And I said, well, the markets are closed on Saturday, so nothing changed on QuantBox. I guess so I need to have the developers either turn it off on Saturday or put something in there. If nothing's changed, then say no new changes. But then why would you email somebody no new change? But anyways, what was it on Sunday, Jim, that it came out? No, but there was one. No, it was Sunday morning. That right. If you got one at 9:20 a.m. Yeah. So anyways, yeah. So when the markets close, very little changes on QuantBox. So I'll see if I can get that turned off. They're just so busy doing other things. Like I'll make that a 10th priority. Number 10 for sure. All right, so let's get on with it. Another wonderful week to be alive and to be a trader. Yields are up. Okay. There's still some risk on in the market. And so I would expect maybe this to come down a little bit today. That would be interesting. Oil's down, which is nice because I want to buy it, buy another dip. So I'd like to see that down. The question is, how far is the dip going to be? Well, this is why we use technical analysis. Gold not going up, which makes sense. And whoa, that's the first time we've been staring at this. Locked and loaded above 5K. I forgot to have a traders.com coffee mug. Hang on. Sorry, I'm like a kid at Christmas. Oh, I forgot my toys. I forgot my toys. Hang on. I got to pour my coffee into my other coffee mug. Not that my coffee mug matches my outfit or anything. Nice. All right. Anywho, so an exciting day to be alive. So let's zoom in a little bit and see what's going on, if anything. And we still have a big, fat, giant niet. Nada. Zip, zilch. So we look at, let's say, the long term of gold. Really, nothing. That could be a zero. Yields are up significantly. We've gone from 3.85, let's say. Now we're well above 4. So that's definitely negative. That's been happening. Dollar over the last 30 days has been strong. Last week, it was just a little bit bearish. So more leaning to risk off than risk on, but last night it looked a little more risk on than risk off. That's where you get the teeter-totter. Yen is down, which is generally good for the month, but has been strong over the week and overnight. S&P 500 up 5%. That's a monster month. Obviously, that's a risk-on scenario. 1.67 for the week. 0.5% for the day. So it's definitely risk on, but then, right? VIX is still up for the month. Okay. That's interesting. I think this should be scoring differently. That should be a 1, I think, but maybe you got to get over 5% for it to click over into a 1. I'll double check that. That's a pretty, oops. What did I do? VIX, yeah, 3.9. So volatility up. Probably need to break a threshold. That's probably what that is. So it's still flat, but I would say leaning to risk off slightly, but we're not there yet. Too early. So really, there's no intrinsic trend. Be very, very careful trading dollar. That's usually what you go to when you're doing a risk on or risk off trade. It's not there. Or so look at cross pairs, look at individual currencies and currency pairs, looking for relative strength. So I would start by saying, how's the euro doing versus everybody? How's the pound doing versus everybody? How's the Kiwi doing versus everybody? And start trying to bet on the right horse in this case. So that's all relative strength. And you'll see what do we see here? Yen strong, yen strong, yen strong, yen strong, yen strong. All right. Yen is strong today. So maybe that sets up your theme for the next few hours for the day. Between now, which is pre-New York open, until maybe the London close, which is New York lunchtime. So there's definitely got some risk off here. Interesting. FTSE down, DAX up, S&P 500, but Dow down. So this is more risk on, huh? And then you look at the yen. So it's definitely, there's a disconnect between what the stock market's doing, what the yen's doing. Doesn't mean one of them's wrong. There's just, they're not trading together. And that's exactly what QuantBox is telling you on this risk gauges. Everything is doing what it's doing, but not in relation to what other things are doing. So you got to pick your theme, and it's not it's not a global macro trend. It's just whatever's working now. So you got to stay short term, focus more on day trading and intraday trading. So yeah, yeah, yep, 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 yep. We got to look at the COT. Markets long gold. I disagree with that, but it doesn't matter what I think. Aussie's still quite weak. Okay, yields expected to come down. Money coming out of the S&P 500, which I think is kind of interesting. So that's the stock, the accumulation of these markets, and then we can check the flows. And money went into New Zealand. Any idea why? Oh, is it because the central bank has changed their monetary policy in a way that would be bullish? Yeah, probably. Wait, whoa, I'm drinking the wrong coffee mug. That's from last week. Note to self: don't drink the swamp water. Yeah, let me go back to my traders. Traders.co makes the coffee taste so good. What else? Yeah, money going into yen. Oh no. But the market is still very heavily short. So you can see percentage change in contracts long was big. And the percentage change long and short contracts was up, but not by half, right? So the relative change has capital flowing into buying yen instead of selling yen. Whoa, and yens are down. Yen pairs are down, which means yen is strong, which is following our flow chart here. Gold's catching a bid, whatever. I just, yeah, people want to own it for different reasons than I know. That's all. Not sure. They're definitely not hedging inflation. What inflation? Yeah. And then boom, we just dropped to neutral very, very quickly. Oops, let's do the next one. All right. Japanese stock market. What? Could be indicative of a top. Now, the market is still 70% long, but we lost bulls and we gained bears. Whoa, interesting. 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 Whoa, whoa, whoa. Okay. What about euro? Some people are buying, but most people shorted euro last week. The market is 60-40 in positioning. That's the stuff above us. But in flow, okay, bears won last week. The bears won. Not the Chiefs, the bears. The bulls did cut. All right, kitty cat, lost the money it gained. Look at all those bulls gone. So all that money that went into CAD, they took it back out. I suppose that's normal in 50-50 markets. I don't know. But if you remember 1 or 2 weeks ago, a lot of money went into CAD and CAD went up. Now it's gone. So I'm like, well, I'm going to have to break up with my love affair with Canadian dollar. Sorry, Canada. It's not me. It's you. I don't like the friends you hang out with, these bears, huh? So anyways, CAD out, silver down. And 31 1,000 people took profit on oil last week. What? But I want to buy it. That's terrible. And 10% of them went bearish on us. Ugh. Huh. Well, hell's bells. Yeah, I'm interested in buying a dip on oil. Hmm. So things to align our satellites, you should review this at least once a day to align your satellites. You know, like pound Aussie up, DAX up, USD ZAR up, USD Swiss franc up, USD CAD up. Okay, that the stuff with the USD on the left, the rand, the Swissy, and the CAD, that says risk off. Pound Aussie, Euro Aussie obviously means Aussie weakness is expected on the long term, but it also tells us these are not risk on. Those are the things you do when the markets are sideways. Flipping around here, I guess I could have just changed the bias. Can I? Oh no. I can change the score. Okay, on the flip side, very bearish Aussie dollar. So once again, dollar strength. You see all the dollar strength? Then Aussie CAD, Aussie Kiwi. Clearly, you should wake up in the morning and look at your charts. See what you're supposed to do is pull up this page as an example and say, maybe today I look to trade Aussie dollar down if the technical analysis confirms Aussie dollar bearish. Okay. That would be the here and now, the today type action. And then the other stuff, maybe you find related currency pairs that are more neutral and look at more like swing trading and see if any of these are out of position for you to buy a dip or sell a rip, depending on the direction of the technical trend. Okay. So what you're essentially doing is which neutral pair is going to break out in the next few days and not be neutral, which ones will become bearish, which ones will become bullish, and be kind of part of the newer trend. Just to review oh no, I wanted to do this one as a review of what's happened over the last 7 days. On Mondays, it's a good idea to realign your satellites. Okay. And let's see, Bitcoin. Wow. 12% in the last 30 days. Oil's way up, but remember, it's down today, but it's up this week. This might be buy the dip. You see how to read this? It's down now to $76, but it's up for the last 7 days. Oh, oh my. And then these other things are up 2%. Not great. Not great. Not bad. All the yens are flat for the week. There's lots of volatility, though, huh? Remember, the USD yen is up near 150, and we believe there's a lot of resistance there. In particular, 152 is the line in the sand, and it's wide and it's deep. Okay, how about this one? Kiwi strong, Kiwi strong, Kiwi strong. I don't know. What do you think? Kiwi strong? How does Kiwi do on the other side? Kiwi yen strong, Kiwi Swissy strong, Kiwi dollar strong. I don't know. Kiwi CAD strong. Should you be watching Kiwi this week? I believe, if I remember correctly, Kiwi dollars at monthly target, but a monetary policy change can take you to R3. It's really the only thing that'll help you predict an R3. Okay, it's not getting any love. Okay, not any love against the dollar. Maybe we could check out Kiwi yen. It's ever so neutral. Look at the seasonality here. Now, we already know like the yen typically stays weak in well, as far as the first half. Um, you could see that January was expected to be up, and it was up. And then it starts to tailor off between February and April. It's still generally up, but the rate of change changes. Technically, the things changed over the last few days, again, having to do with the monetary policy of the central bank. And it's above average. And it's the technically we are making higher highs. This is the daily chart. Okay, even though things are neutral, its technicals are now aligned up with seasonal. And maybe this, okay, this starts to change from 51% long to 60. We want to pay attention to this, the positioning changes by institutions. Remember, institutions will pay attention to monetary policy changes. And so in the next week or two, maybe Kiwi yen becomes bullish again. And over the last 5 years, it can stay, like I said, long till Canada Day. Um, over the last 20 years, that's somewhat not true. Now we could also look at something that we're bearish on, and that would be Aussie. But the thing is, when you get good Kiwi news, very often Aussie can benefit from it. And so all of a sudden, fundamentally, it doesn't make sense, but they are related. But right now, you can see New Zealand is catching the bid and Aussie is getting sold off. You can look at the sideways action normally, huh? Normally, this is typically not the time of year to be selling this pair, but selling it is. We are below the average price. We're definitely making lower lows, lower highs. Projection is, up and then sell. Okay. And of course, we know, just covering Kiwi dollar, that institutional investors, only 50%, 51% are long Kiwi dollar. So they're not really buying this yet. Selling this is what I mean, buying Kiwi dollar. But we do know 75% are short the Aussie dollar. So if suddenly the Kiwi dollar is strong because of monetary policy change, well, nobody's going to stop it with an Aussie dollar. So you might end up trading a crosspair like this today. And it's weird. You might, Wayne, I rarely trade Aussie dollar versus Kiwi. And I say, yeah, well, that's what happens when there's no underlying intrinsic trend. You see, you get yourself into that, but that's the relative strength. But at least this is backed up fundamentally. And you can see the change in policy on our, let's take a guess. Do you think it's on the central banking page? Yeah, that's where we keep our monetary policy research. And you go to New Zealand. And not long ago, they were flat, 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 and then expected to cut. They were telling us they were going to cut before everybody else. And well, they changed their mind. Inflation's not coming down to the point that they like it. So there's a potential for a raise. Pause, cut. Oh, well, that's new. Yeah, that's it. That little thing. Kiwi strength. Okay. So to see it, Kiwi used to be at the bottom of this. Now the CAD is the biggest loser. And Kiwi is less than CAD. It used to be more than CAD. So anyways, there you go. That's it. It's all accounted for. Now you know. Yeah. You like the halftime show? Usher Points said something about the A-Town. I'm like, oh my God, I'm in the A-Town. I got so excited. All right. All right. And then just quickly, we could look at some technicals. I want to look at oil. Okay. And we go to hourly. And I want it to come down so I can buy it. I know, ugly chart. I know. Don't get upset. If you want, I can change it. Let's change it. Let's just change it. Okay, cool. So, yeah. In fact, I'm going to change it to Confluence, daily Confluence. And yeah, what do you guys think of 75, 74, 75, 75-ish? Mm-hmm. I'm going to mark some of these. I might be interested here. And I might be interested. I'll put it in here. 70. And then I go back here. And okay. So now my job is to wait for this to turn bullish and then buy it. Yeah, Jim, the 21.55. Yeah. So now I wait. These are ambushes. I sit and I wait. And it's like an if-then statement. If it does this, I buy it, right? No. Because it probably would do this. So now I buy it down here, right? No. These are prices in which we would anticipate reversal patterns. There was a guy famous for selling like $500 books. And here's what the $500 book said. If it reverses at support, it's probably tradable. If it reverses at resistance, it's probably tradable. So it's not that we're at support. It's not that we're at resistance. These are just prices we're interested in. Okay? Doesn't mean we buy it. But if you get a reversal pattern on a small time frame around the price you're interested for whatever reason you're interested in it, hopefully you're using technical analysis, right? So if it reversed here, somewhere like one of those dips, I would buy it. Now, part of this, of course, as I said 6 months ago, I'd be buying it right around this time of year. So I'm not making it up. So that brings me, wow, look at that. Cool. So that brings me some joy. And then I back out a little bit. So I say, okay, 6 months ago, I thought up around this time of year. So let me zoom in. We had a big decline. And so I asked myself, can I call this a bottom? Seems like I could. Okay, a double bottom of a double bottom. Cool. Because, let me make it a little thinner again. Because we had the up and the down. Then we had the higher high, higher low. I can definitely engage now. Why? Because it, why? Because of the pattern? Well, I would argue that if 6 months ago I said or around now is when we'd be building, and now it double bottoms on a double bottom, right? And then it made a higher high. It seems like I have permission to engage at this level now, don't I? Of course, I could have bought it a little earlier, but whatever. And so now what? Now we're in this process. Oops. Okay, these arrows are way too big. All right, let's do it this way. There we go. Like, couldn't this be the process that's building? See, if we get some joy out of this trade, it should actually outlast this. Okay, meaning if we were looking at this on a 5-minute chart, 15-minute chart, the double bottom expects a higher high, doesn't it? If we were just trading the big one, let me make this yet another color. All right. And then we'll make this fat. Okay. Isn't this the primary pattern? And if you were trading that on a 15-minute chart, you would say, oh, double bottom. So therefore, it's going to make a higher high. And then it's going to make a higher low, probably roll reversal around that top. So now you'd have to mark all that out and say, well, we should get above that. And then if we do, it makes a higher high. It at some point will come down and then use that as a roll reversal and then make yet a new higher high until the trend goes away. And then QuantBox tells me, well, typically around this time of year, it goes up till June. Oh. So it's February, and we're like, I could hold this till June? Well, we need some luck on it. Whether it's luck or love, I don't know. But it's plausible. So that's where I'm wondering, like, is this right? When you now put us into context of where we are in the moment, this has a much different meaning. If you were already thinking, wow, you could treat this as the bottom, okay, and this is the higher high, and now Then you throw in seasonality and say, oh, well, the seasonal trend could be this, right? It could last, as they say in America, a minute. Cool. So, should be interesting. Interesting. Oh, should be interesting. Hmm. Meanwhile, there's no underlying trend. I think what will happen is if oil goes back to $90 on this WTI, the media will explain that it has something to do with, I don't know, I guess they would say soft landing, improved GDP outlook globally. Okay. Now, this first move, I actually think I was on. I don't remember, but I believe I was. And then we had this idea of peace in the Middle East. And then we just came on. And then you realize the whole peace in the Middle East thing was just media describing that we just hit the M4 and they had to find some reason for oil to come down. You're like, well, maybe if we're trending, maybe that's just the top of the market, right? So now I think we can confirm a trend and maybe have an opportunity to buy the dip and the dropping into much smaller time frames. The dip could be as low as 74. I really don't want it to go lower than 74. 75 sounds pretty cool. Okay, so we got 76, we got 75, and we got 74. Cool. I can check my technical database on commodities and see if there's anything that it thinks for oil. And that gas down, Brent up slightly, nat gas down, and gold down. No, nothing specific for Brent or for WTI. There's a slight up on Brent, but I would call that market sideways. So no, no, no love from our technically focused AI. Cool. So be careful. All right. Well, peace on earth. May the pips be with you. May your profits be above average. I'll probably see you later, huh? Cool. Cheerio, TT, FN, ta ta for now.